Everybody, and welcome to another episode on my channel. Today we'll be doing a quick portfolio update followed by a deep dive into one of my favorite dividend growth companies, Visa. So without further ado, let's go and check out the portfolio. The performance of the portfolio over the last 3 months has been up about 4%. Over the past year, it is up about 14%. And the performance over all time, which is just shy of a year and a half, is up about 7%. If we scroll down, we can have a look at each of the individual holdings. As you can see, I have some cash available here. I freed up some cash this weekend, added some cash in order to take advantage of future opportunities. And here we see Apple is up about 20%, American Express is up about 2%, Bank of America basically break even, Brookfield Corp, I am down about 1.5%, Costco up about 16%, Canadian Pacific, after a successful merger with Kansas City, is up about 18.9%. Scroll down a bit. Home Depot is down about 3%. JP Morgan up about 22%. Lowe's up 5%. Manulife almost up 2%. Microsoft is up 21%. NSC is up about 4%. Realty Income is down about 2%. Royal Bank is up about 1%. TD is down almost 4%. T. Rowe Price is down about 8%. Texas Instruments up 4%. Union Pacific basically break even. And Visa, like I said, which we will be talking about in great length in a little bit, is up about 18%. And Vici Properties is basically break even. So let's go and look at the portfolio spreadsheet that I made. Here you can see it's all those same companies with various attributes of each, the number of shares that I own, the market value of those shares, the cost that I paid, and my gain and losses here in both a dollar and a percentage basis, basically up about 7.6% as we saw on my Wealthsimple screen. Here what I've done is I've taken the annual dividends that I receive from these companies and summarized them here in a percentage of the total dividend income, and that is represented here on this graph that I sort of blew up here so that it's easy for us to look at. So TD Bank right now provides about 16.5% of my total dividend income for the year, followed by Texas Instruments, JP Morgan, etc. If we go all the way to this little pie, if you can see, Visa right now is right over here, provides about 1.7% of my dividend income, but that is how I've designed the portfolio because this is a dividend growth company, and over time I expect Visa to overlap a lot of these other mature businesses in terms of the dividend income it provides and the total shareholder return. So now let's go and look at Visa, the business, and see what they actually do so we can get a better understanding of why I've made an investment in Visa. So I've gone to the Visa website. You can find this right at visa.ca or visa.com. And let's go and look at what they have here as an explanation of their business.
Almost everyone knows the Visa brand, one of the most trusted and recognizable in the world. But not everyone knows what Visa does.
A credit card company.
Not a credit card company.
It's a bank company.
Nope. They loan money. Try again.
They lend the money to you and then they charge your bank account later.
Sorry.
I have no idea.
Oh!
Can I have a clue?
Visa is a payments technology company that facilitates commerce around the world. Whether you are making a purchase, sending money to a friend, or part of a business moving money to another business. Visa pioneered the electronic payments business more than 60 years ago, envisioning a world in which paying for something could be translated into electrons and photons that move across the globe at the speed of light.
The consumer may access an infinite range of goods and services whenever he chooses, wherever he may be.
Today, there are more than 3 billion Visa accounts around the world, in more than 200 countries and territories. During fiscal year 2019, more than 200 billion payments and cash transactions were made with the Visa brand, representing more than 11 trillion in payments and cash volume, from the largest cities to remote communities across the globe. Each transaction made on the Visa network represents a packet of data that moves across a massive telecommunications network, more than 10 million miles in length end to end. The network is made up of fiber, Ethernet, wireless, satellite, and virtual connections, linking consumers, businesses, governments, and financial institutions. The journey of each transaction starts with you. When you click, swipe, dip, or tap to pay, data about the transaction travels from the store owner to their bank or processor, which captures the information and sends it to VisaNet. VisaNet uses artificial intelligence technology to analyze every aspect of the transaction to determine the level of risk for fraud. VisaNet routes the information to the bank that issued the customer's credit or debit account. The bank decides whether to approve or decline the transaction based on Visa's risk score and its own data about the account. Traveling back through VisaNet, the approved request returns to the store owner, where the transaction is completed. Later on, Visa makes sure the money is transferred. This authorization all happens in less than 1 second, whether you're in Miami, Madrid, or Mumbai. Making sure that every transaction flows instantly are several global data centers, synchronized in real time so that if one system experiences issues, another picks up. Software developers and other partners can use Visa's developer tools to build innovative ways to pay. As a payments leader, Visa is extending the boundaries of our network and the potential of billions of connected devices, bringing the security and reliability of our brand to customers across the entire payments ecosystem. Digital commerce can extend to even the most remote regions, where people who don't typically bank can access the benefits of mobile technology. Despite the growth of digital payments, about 1.7 billion people still lack access to formal financial services, and consumers spend nearly $17 trillion in cash and checks. Meeting this opportunity is the mission of Visa's more than 19,000 employees committed to accelerating the global migration to digital payments to enable individuals, businesses, and economies to thrive. You might not know what Visa does because the inner workings of our network are not visible when you're making a payment, and they shouldn't be. Speed, security, and convenience are what drive our business, so you can get on with yours, no matter how, when, and where you choose to pay.
All right, what a great video. So, as we've kind of seen, Visa laid out their business in a small, short video, but I'm not sure if everybody can understand that or kind of appreciate all of the stuff that happens behind the scenes with Visa as a company when you just saw what you saw in the video. So I'm going to kind of go into more of a in-depth overview of Visa and kind of explain what we just saw. So basically, they were describing a transaction. So I'll give you an example. This is just pulled from Visa's annual 2022 report, but basically their core business is explained here. So a consumer, let's call him John, and a merchant, let's call them a shoe store, they are going to interact. John wants to buy a pair of shoes. Right down here is the flow of money. So John swipes his Visa card. The information goes to the Visa card's issuing bank, and then that information is flown through VisaNet, which then sends the money to the acquirer's bank, which in this case is the shoe store's bank, and then delivers the money to the shoe store. So all of that happens, like they said, within a matter of seconds. What's very interesting about this business is Visa owns this process of relaying information and what they call data processing, but they do not actually issue the cards. The bank, so for instance, let's call them Toronto Dominion Bank here, TD, they issue the Visa cards, and the credit is actually also issued by that same bank. So Visa does not actually carry the debt or a risk of debt with the consumer. They just facilitate the transaction and they take a percentage of that transaction. So let's say John spent $100 on a pair of shoes, and the percentage per the transaction, which we will call the discount rate, is 2%. A portion of that 2% flows to Visa. So Visa makes money per transaction, and they do it for processing the transaction and the data, they do not make money off of debt because they do not carry the debt. The debt is carried by the issuing bank, like we said, TD. It is a beautiful business model because it allows Visa to scale and just facilitate transactions and not carry the risk of people not paying their credit card. That risk is on the bank that facilitated this transaction with, or that issued the credit card to the consumer, in our case, John's Bank TD. So here we can see their fiscal 2022 key statistics. They had net revenues of 29 billion, net income of 16 to 15 billion, depending whether you use generally accepted accounting principles or non-GAAP. They processed 192.5 billion transactions. They had payment volumes of 11.6 trillion. They had 160 currencies which they supported in these transactions. And this is what I love to see, dividends and share buybacks. They spent 14.8 billion on dividends and share buybacks alone last year. It's awesome to see as an investor. We're going to go and look at their avenues of growth or their strategy as well. This is all again in their financial report, their fiscal report of 2022. So right now, we just talked about the consumer payments. They remain focused on this core business, moving trillions of consumer spending in cash and checks to cards and digital accounts on Visa's network. There is still a lot of cash that exchange hands in the world. They see this as an opportunity to try to move people towards the credit card payment facilitating systems that they have. And by doing so, they ensure that they can keep growing and they can process more transactions, which means more revenue as they take a percentage of each transaction. So their net flows. So this is describing other opportunities. So P2P means peer-to-peer, B2C, business to consumer, B2B, business to large business, B2 little b, business to small business, G2C, government to citizen or government to consumer. And then they also have these value-added services which they provide, such as issuing solutions, accepting solutions, so PIN pads and things like that, risk, open banking, and advisory services. So that's kind of been Visa's business overview in a glance. Like we said, they take a percentage of each transaction. They get paid for processing the data. And the beauty of their business is in these times where there's high inflation and as prices rise, the percentage of their transaction stays relatively the same, but they're getting a percentage of a larger dollar amount, which equates to more revenue for them. And the beauty of their business is that it's very scalable. There is not a lot of investment required once these initial payment networks are set up. So let's go and look at my portfolio and we'll look at Visa from there. So this is my work portfolios in Canadian dollars. This is the portfolio you see, but this is in American dollars. We're going to click here. Let's go to my holdings, scroll down and look for Visa. Visa's right here. Okay, so Visa we can see has a market cap of $480 billion. It trades at a very expensive valuation for good reason. It is a great business, like we saw. It's very reliable and they continue to show their growth over a vast majority of basically decades. Their price to earnings, at a forward is 25. It's a little pricey, but I got in at what I felt was a fair price, a little bit under that. Price to sales is shown there, price to book. The dividend yield, nothing to scream home about at 0.77. And the payout ratio was very nice, a very low 23%. So ample room to grow that dividend over a long period of time. So here we can see their profit margin, like I said, it's super high. Operating margin at 66, almost 67%. Profit margin at 50%. Every dollar that they're generating in revenue turns into about 50 cents a profit. That is just amazing. I don't know if there are many businesses like this other than MasterCard, but the amount of profit that they generate per dollar of revenue is astounding. Cash, we see here there's $13.8 billion of cash. They have some debt, and then their net cash is negative because of the debt. But when you look at their revenue and their earnings before interest, tax, and depreciation, you'll be able to see that they can handle this debt no problem. So if we look at it over the past 10 years, they're just humming like clockwork and growing at 10.89% per year over the past 10 years of revenue. Here we can see the products breaking down. So we have the client incentives, that's a negative revenue essentially. That's when they offer you specific packages and things like that in order to draw you in as a consumer. We have the data processing revenues being their bulk, which we discussed about, making money per transaction, international transactions, and services and other. Here we have a split by non-US and US, so it's fairly equally weighted there. Let's go and look at their EBITDA, or earnings before interest, tax, and depreciation. EBITDA has grown at a steady 6.81% per year over the past 10 years. Very great to see. Let's go and look at their free cash flow. Free cash flow is growing at an insane amount at 14.46%. So this is awesome to see as well. Let's go and look at their free cash flow per share adjusted. It is astounding. It's up 19.58% per year over the past 10 years. So they are growing their free cash flow per share. So our free cash flow per our equity investment or their common shares outstanding at an astounding rate at 19.58%. That's the adjusted, and the regular should not be that much different. Yep, 19.60% at a free cash flow per share basis. Let's go and look at their net income. I would expect the same, growing even higher at 21.44% per year over the past 10 years. And that is because they have such a high margin business at 50% profit margin, meaning that they are able to take the revenue, achieve economies of scale, drive up their profits without significant investments into their business. Look at their earnings per share. Again, very high, 26.65% per year over the past 10 years. Now this valuation, being a higher value company or a higher multiple traded valued company, is starting to make a lot more sense. It's a premium put on the company because of the quality of the business. Let's look at their dividends. I bought this as a dividend growth play, and they are increasing their dividends each year at a very high rate, 18.49% per year over the past 10 years. We can see that it is just like a staircase stepping up and up and up and up over the past 10 years. Great to see. I would expect their shares outstanding to be decreasing. Yes, they are buying back shares at a very high rate at about 5.74% per year over the past 10 years. So rewarding you tax efficiently by buying back shares, therefore reducing the outstanding shares in the marketplace and increasing your ownership of the company. So, like I said, that's Visa at a glance. They are an amazing company. The other companies as well in this same payment processing realm or sector would be MasterCard. They're probably the closest comparable to Visa. They're also a great company. I've just decided to choose Visa because I was able to get in at a valuation that I felt was fair for paying for the stock at that point in time. Another one that would be great to look at would be Amex, and I can do another whole video on that one as well. And I plan to do a set of videos on MasterCard as well, just to make the comparables a little bit easier for people to read. So that was my video on Visa. I hope you enjoyed it. If you have any questions, comments, please leave them below and I will try to get to them. I encourage you to hit the like button, subscribe if you like the content, and make any suggestions for future videos that you would like to see. Thank you, and I hope you have a great day. Please note, I am not a financial advisor by any means. All of this information has been presented for your informational, educational purposes only and entertainment. Please do not make any investment decisions on the information I've provided and do your own diligence, as I am not liable for any investing losses you may incur. Thank you very much for listening, and I hope you have a great day. Bye.